Many of us think that it takes millions to start a real estate investment. But with long-term planning, I'll show you that you can own one now without having to shell out $1 million. All you need is what I call the 3 C's of buying a property. I'm Edric Maguan, and this is The Real Deal! Welcome to my channel. I'll be sharing with you real stories and practical investment strategies so you can have the confidence to start and grow your real estate investments today. I know how investing in real estate can be very intimidating, especially when you fixate on the total price. Your knee-jerk reaction would be to save and save. And just when you feel that you finally saved enough, tumaas na naman yung price. So you end up delaying your investment year after year after year. So forget about the millions. When it comes to pre-selling properties, just focus on the 3 C's: capacity, credit, cash flow. First, let's talk about capacity. Most pre-selling properties don't require you to pay a spot cash down payment. The down payment is paid on a monthly basis over the pre-selling term, usually 3 to 5 years. So if you have a stable income, simple lang. Just ask yourself, can I pay the monthly down payment over the pre-selling term? If you answered yes, then your next question should be, how do I pay the balance? Which brings us to the second C. And this is the C that people fear the most: credit. Marami kasing takot magkautang. But remember, not all debts are the same. Getting a home loan is actually a good debt. How? Take one of my investments as an example. I invested in a condo unit 3 years ago, and to date, it has a compounded annual growth rate of 20% versus the 6% interest rate from the home loan. You see, the value increase of the property is so much higher than the cost of borrowing the money. This is called the power of leverage. Now, the last question you have to ask yourself is, will I be able to pay the monthly loan amortization 3 to 5 years from now? Which brings us to the third C, cash flows. Cash flows is simply your inflows or your income less your outflows or your payments. In managing our cash flows, we have to view it from a long-term perspective. What do I mean by this? In deciding which properties you can afford, don't just look at your current capacity, but more importantly, look at your long-term earning potential. Generally, paakyat lang ng paakyat ang income natin over the years. Look back on your life 5 years ago, and I'm sure you'll realize that your income and lifestyle has improved so much, right? So if you're a hardworking individual and you see yourself progressing in your career, then have no doubt in your capability. Again, just remember the 3 C's: capacity, credit, cash flow. Actually, there's another important C that you shouldn't miss. Click the subscribe button for more property investment tips. And if you need help in getting the right property investment for you, sign up for a free consultation with me via the link in the description. See you guys next time!